Let me ask you something. Have you ever watched price break a key level, you enter with a full confidence and boom, it reverses and stops you out. In this video I'm going to show you how smart money create those traps using two deadly patterns, the rejection block and stop hunt block. You will learn the psychological tricks behind them and how to finally turn that knowledge into sniper's interest. And the best part, I built a custom indicator that finds these zones automatically, and I'm going to show you exactly how to use it. Grab your chart, let's dive in. So, what is rejection block exactly? It's a price zone where the market tries to break through key levels, is a support on resistance, but fails and sharply pushed back. These types of price behavior usually comes with long wicks and high volatility, and it often signals institutional presence and potential reversal or consolidation zone. The key idea here is price gets pushed into a level, but instead of continuing, it gets rejected. This tells us the big player are likely stopping in a with serious volume, is absorbing liquidity or completely reversing direction. Let's look at this example. First, we see the market forming a clear support level. After some time, price starts slowly returning to this area, giving us a hint that something might be building up. And then we spot this candle. This moves takes out some liquidity, because if we zoom into a lower time frame, we can clearly see a small consolidation zone sitting there. That's where stop losses were likely staked. What's important is that this candle rejects immediately, leaving a strong wick. This is where we call rejection block. It shows that price tried to test this level, but was forcefully pushed back. No clean break, just rejection. And right after that, price started pushing higher, aiming for the next swing high, which means that the market is now going for the next liquidity target. Now that we understand the basics, let's look at specific price action pattern called a stop hunt block, or liquidity rejection block. It often shows a market manipulation and can give us a great trade setup. A stop hunt block and liquidity rejection block are basically the same thing, just different names for a very similar concept. A stop hunt block is when price first grabs liquidity, meaning it takes out stop losses or triggers pending orders above or below a key level, and then immediately rejects this move, leaving behind a candle with a very long wick. This indicates a stop hunt event. If we were to mark the whole candle as an order block, it will be too large and not perceived enough for trading. So instead, we just mark the wick area, which represents the liquidity grab, and use it as stop hunt block. In short, it's candle with a long wick showing liquidity grab and rejection. It marks manipulation, usually stop loss hunting. Traders often use this wick as an important area for potential entries or reacts zones. Okay, now let's talk about psychology. To understand rejection block, you have to understand how smart money traps retail traders using liquidity. This is psychological mechanism behind it. First, price aggressively pierces a key level. This triggers breakout trades and hits stop losses. That spike creates the liquidity smart money needs to enter big positions. Then, retail traders see the breakout and rush in, but that's exactly where smart money is waiting, to enter in the opposite direction. And suddenly the breakout fails. Price snaps back hard, trapping everyone who just entered. You'll often notice a long wick of the candle, and this happens because that long candle is creating manipulation. It's designed to grab liquidity and give the illusion that price might continue, but instead it reverses sharply. How to actually mark a rejection block on your chart? To mark a rejection block, you first need to identify a candle that tapped into a zone of interest. It can be a supply-demand area or order block. And then showed a strong rejection, or use candle that triggered a liquidity sweep and showed a clear rejection. This candle usually has a long wick and small body, or it's followed by a sharp reversal in opposite direction. Once you found this candle, you need to mark the wick area. Logically, the wick is where retail gets trapped, and the body is where smart money execute. That's why we use the candle wick. Let's break down the key difference between a rejection block and stop hunt block. Starting with a core idea, a rejection block forms when price simply rejects from a key zone, like support or resistance. In contrast, a stop hunt block occurs when price first grabs liquidity, meaning it sweeps stop losses or pending orders, and then immediately rejects. Why does it form? A rejection block is usually just a test of a level, while a stop hunt block is a result of manipulation before a reversal. And finally, when do they happen? A rejection block forms after price hits a key level, but a stop hunt block only happens after liquidity has been gripped, either above or below that level. So, to make it easier to spot this concept on the chart, I have created a custom indicator. It highlights two types of rejection blocks, regular ones and those that form after liquidity grab. When price sweeps a high or low, takes out liquidity and then quickly rejects, this wick becomes a key zone. The indicator marks it as a rejection block, showing where smart money stepped in after the sweep. These zones are much more perceived and powerful than standard ones. Personally, I mostly focus on these liquidity-based rejection blocks, because they give a cleaner reaction and more reliable setups. This indicator absolutely for free. You can get access to the link in the description. Alright, now that we have gone over the theory, let's break down the strategy step by step. First, we always start by looking at the high time frame levels. That can be 1 hour, 4 hour or daily time frame. What we are looking for here is a stop Hunt block. This could be an area where price previously took out liquidity and then sharply reversed. Once we identified a valid stop Hunt block, we don't rush in, we wait for the price to come back into that zone, either to retest it or maybe to fill in a balance that was left behind. Now here is a key part. When price starts approaching to the block or the imbalance, we switch to a lower time frame to look for reaction. Because remember, just because price is coming into the block, it doesn't mean that it's going to reverse right away. It could break through or it could reject. So, what do we want to see? We're watching for the signs of a strong reaction, things like an aggressive market structure break or maybe a clearer balance forming on the lower time frame. That's our clue. If we see that kind of reaction, that's our signal to enter from the imbalance. And then we look to the target to the next area. It can be liquidity or a balance on high time frame level. Let's look at this example. Here we can see consolidation at the bottom, where price was ranging in supply and demand zone. After that, price broke out to this upside. This is our point of interest now. Below that, we can also notice a rejection block. So we wait for price to come back and retest this area. Now the price has tested this zone. We can also see liquidity grab followed by a strong bearish candle. It gives us a reaction and possibly confirmation that rejection block. So here, price is testing the area of interest and we see a clear reaction. Price reverses from the level. After that, we wait for the price to come back down and test the rejection block, the one that caused the reaction from our zone of interest. When price approaches the rejection block, we don't jump in. We wait for the confirmation, a shift in structure or reaction on a lower time frame. Once we get the confirmation, that's where we look for a clean entry. So bro, you made it to the end. Good, it means you're serious. Now the one more smart move, check the description. There is an indicator waiting for you there. And trust me, I believe in you and in every my subscribers, even when the world doubts you. Trust the process and I will see you in the next video.